Good morning, Southern California, AM 1220 KHTS. Your host, Fred Arnold, on the Santa Clarita Valley Chamber of Commerce Business Spotlight. I'm joined by Rhona Jukes. Rhona Jukes is a good friend from the Chamber of Commerce, known Rhona for a long time. Longtime ambassador of the Chamber.
Yes.
Very involved with the Chamber of Commerce and, of course, mortgage lending here in Southern California and throughout California. And Rhona, I want to talk today about what happens when you put less than 20% down. Let's talk about some options people have out there when it comes to less than 20% down when buying a home.
Well, if you put less than 20% down, the lenders are going to require that you carry mortgage insurance. FHA has the best product right now that'll allow you to put 3.5% down, but you do have to pay an upfront mortgage insurance premium as well as a monthly for the life of the loan.
So let's talk about that for a minute.
Okay.
So 3.5% down, FHA, more lenient on the credit scores. Why FHA then, and would some borrowers go?
You know, FHA is federally insured by the government, so it protects the investor 100% against any loss. And it's there to help a homeowner get into a home and to purchase, be able to purchase with a low down payment, a little bit more flexible on the credit. Debt-to-income ratio, they'll accept a higher one than a conventional loan. So it allows that first-time home buyer to get in, own a home, begin to build their equity, and move from there.
It sounds like it's the most flexible. What's the difference between the upfront mortgage insurance and then the monthly premium you pay with your mortgage payment?
Well, the upfront mortgage insurance premium is kind of, think of it as a down payment to the insurance company. It's typically a factor of 1.75%, but it's added to the loan amount. So you're paying for that upfront fee over the term of the loan, 30-year fixed. The monthly mortgage insurance premium is paid on a monthly basis. In fact, it's a little bit high because, you know, the insurance rates are getting up there. So that's
because you're only putting 3.5%. You're only
putting 3.5% down, and it's a higher risk loan. However, once you've paid on that loan for 2 years,
this is on a conventional. On an FHA?
FHA loan and or conventional if you have mortgage insurance, because conventional will also ask for mortgage insurance with less than 20% down. Factor may not be as high, but it's all based on an overall profile, credit score, loan to value. And
so let's talk about conventional. Conventional,
Okay.
Two different terms, and those wondering, okay, FHA is a particular product. Conventional is usually referred to a Fannie Freddie loan.
Correct.
Rates are a little bit higher, but the mortgage insurance is a little bit less expensive.
Yes, it's a little bit less expensive, and it doesn't have the same restrictions that an FHA product does today. Once your loan to value reaches 80% or less, and you've paid on the loan for 2 years, then you can look to reevaluate your situation and may be able to remove that mortgage insurance premium and eliminate it from your monthly payments because of your loan to value is less than when you started. Property values are definitely going up, and they're going to continue to rise. So if you've purchased your home, let's say in 2010, 2011, you may well be in a position to refinance, eliminate your mortgage insurance premium, and in turn reduce your monthly output, and in turn will be able to have more money to spend with your family.
Or apply it to principal.
Or you can apply it to principal, definitely.
Yeah. Now, one of the things that I hear a lot of, and so I'll throw this at you since we're talking about people that put very little money down, they say, well, I don't want to owe so much when in 20, 30 years. And there's this bi-monthly, or you can just apply principal every month. What are your thoughts towards applying extra principal?
Well, you know, I sit down with my clients and we talk about, you know, loan terms, and we talk about monthly payments and where their comfort level is. And what I always show them, by just paying $100 a month towards your principal, you can reduce the term of your loan by 2.5 to 3 years. That's just $100. So you can imagine if you're able and in a position to put more each month or go bi-monthly, where you make your payments every 2 weeks, you will dramatically reduce your term of your loan.
Well, one thing I've mentioned in the past when people think, you know, I'll do this bi-weekly program, I say, well, just take your payment,
Right.
divide it by 12, and apply that extra, you know, so if it's $1,000 a month, it's extra $183 a month.
Right.
Apply it to principal, and you pay off your loan about 7 years earlier.
Exactly.
Magical, isn't it?
And people just don't realize it, but I feel that is my job as a mortgage specialist, to be able to educate my clients and help them understand how they could pay the loan off early or how to be ready to purchase a home.
Yeah, a couple things I do want to clarify, and I know I was asking a lot of questions, but FHA has different rules than conventional, that has different rules than money down on FHA,
Yes.
that has different rules than 15-year fixed, 20-year fixed. So it's important that you contact someone like Rhona who can explain the premium and the requirements of each one so that you're clear.
Exactly, because, every individual has their own needs and wants, and it's important that you sit down with someone who is going to take the time to speak with you and educate you on your options.
And one last thing I'll mention, I know Rhona does VA loans. So those
I
are
also
no
do
money
VA
down.
loans.
So
No down, and you know what? That holds a special place in my heart because I feel that all of our veterans should be able to become homeowners. And I know some people may be leery and afraid of VA loans. That they're not. Don't be afraid of them. They're just as good and easy to process as a conventional loan.
yeah, to get you approved. Those who want to reach out to you, Rhona, how can they reach you both by phone and email?
Well, they can reach me at 661-505-4335, and that's my direct number at the office.
4335.
4335, or at Rhona at AFFloans.com.
RHONA
RHO.
at AFFloans.com.
Yes, people like to call me Rhonda. But
Yeah. Well, thanks for coming on the show. Thanks for all you do for their Chamber of Commerce. Oh, real quickly. We have
quickly.
about 20 seconds. Home and Garden Show.
Okay, Home and Garden Show this weekend at the Hyatt, and American Family Funding will be there all weekend. We'll be in booth 821, so please stop by, say hello. We'll have the Emergency Expo going on Saturday, as well as the Arts and Crafts Show on Sunday. So I will be there along with my other mortgage specialists from American Family Funding, so please come by and say hello.
Good. Thanks, Rhona.
Thank you.
Appreciate it. Ladies and gentlemen, Rhona Jukes. Rhona Jukes, a mortgage professional with American Family Funding. Well, this show is Fred Arnold. I hope you enjoyed this edition of the Santa Cruz Valley Chamber of Commerce Business Spotlight on AM 1220 KHTS.